C or whatever, it's 3. And I took mine and I plugged it into Katie's and I started getting extra juice.
What do you know?
It's like dangerous driving.
All right, we're live on YouTube. So this is the moment when I say greetings. I'm Joel, and today is Tuesday, April the 28th. Welcome to today's daily briefing with RevThink. I'm joined by Mr. Tim Thompson, who is going to also introduce our very special guest. Tim, say hello.
Hey, it's good to be with you guys today. As you can see, I'm here in front of another open sign because things are opening up in the US. It's fun to be here. And my special part is it's actually in front of a Corona sign. So we got all of it going on right here behind me today. I'm in Nashville, Illinois, on my way to St. Louis and eventually Kansas City. So good to be with you from the road. And Louis, thanks for joining us. You guys have met Louis a few weeks ago when we were talking about the PPP. And now he is back because there are a lot of questions of how to properly manage PPP funds. So it's good to have you back, Louis.
Yep. Thanks, Tim. Happy to be back. Glad I didn't get scared off the first time. A little jealous of your background, though. Mine's not nearly as cool.
Yeah,
so
get outside. You might enjoy it.
Yeah, I know. Next time I'll be in my yard.
Do folks here a favor, anyone that maybe didn't meet you a couple weeks ago, just tell us who you are, the firm you work with, what do you guys have a specialty?
Yep. So my name is Louis Calcerto. I am a tax manager at DeLapp. DeLapp's a medium to large size CPA firm just outside of Portland, Oregon. We're about 100-year-old firm. We have probably 110 people. We're a full service accounting firm. We do tax, assurance, wealth management, IT security, and whatnot. As a big firm, we have specialties in a lot of areas. My particular specialty is mostly in the creative and technology space and also a little bit in biotech.
I love hearing that, right? That you're in the creative space, so you understand the way some of the creative entrepreneurs think in this world.
Yeah, I don't know if I would say if I understand how they think, but I try to. I think our brains are on different sides of the spectrum.
But at least you're experienced in dealing with people who think like us, right?
Yeah, for sure.
Okay.
It's definitely a fun group to work with. I think they're engaged in their business. They're focused on providing value to their clients, and they're fun people to work with.
Well, Tim, I was thinking maybe a good place to start would be let's just ask Louis for sort of a quick update. Like what's transpired? What are the big things that maybe people need to know about? Not necessarily the headlines. We know that the stimulus, the PPP loans got refunded with another 310 billion, I think. But are there just any trends or things that when you think about the way the past few weeks have played out, are there any things just the top of mind that you want creative business owners to know?
Yeah, I mean, the last couple of weeks have been crazy. It's been a lot of changes. There was a lot of stuff before that we thought we knew that we didn't really know, and probably even more that we didn't know that we didn't know. You don't know what you don't know. In the beginning, it was a huge rush. Everyone's trying to figure out how to even calculate their loan amounts. Everyone's rushing to get their loans in. The funds quickly dried up. Now, I mean, we see that they've refunded it. There's been a lot more publicity about really big companies, ones that are definitely not the intended small business group that have gotten the money. Everything I read yesterday, the Lakers somehow got 4.6 million, and they're actually refunding it because they've for one under public scrutiny and obviously have access to outside capital, so they're not really the target group that people are looking for. So I think that is definitely the more common thing that you're seeing in the news. But now, they've refunded it. The second round opened yesterday. Hopefully, I'm sure it's going to dry up quickly again, but hopefully everyone got their loans in. And now kind of the conversation has pivoted from how do I get my money? What is the loan to how do I use this money and how do I use it most appropriately?
Yeah, I think one thing, just a reminder to everyone here, please, this is the perfect session for you to drop questions in the chat here. And I see Colin's already dropped one for us. But yeah, my sense is that there are still a few people that didn't get approved in the first round that are now going through the application process perhaps again. And so if there's any tips on what you need to do in order to make sure you get that application in, of course, Louis, we would appreciate hearing that. But I think maybe the bulk of what we want to talk about is, Tim, we're just hearing questions of people asking, I got approved. I even got the money, but now that I've got the money, what can I or can I not do with the money? But Tim, do you want to
let's start with the most easy question, right? We know that the people that are either already approved or have some thought they're going to get approved. The first question they're asking, the big question they're asking is where the money can be spent. We know there's this 75% kind of number out there, and that's supposed to be spent on payroll. Can you just explain to us the 75%, how that's going to be calculated and maybe reported, and then what we can do with the rest, the other 25%?
Yep. So once you get the money, I kind of think of it in 4 stages. The first stage is spending it on qualified expenses. The biggest group of qualified expenses is what they call payroll costs. The other ones are rent, utilities, interest. But the intent really is for it to be used on payroll. And that's just your normal gross payroll cost, people that are on payroll, not independent contractors. So they then came out with a rule saying that 75% of the loan has to be used on payroll costs. The other 25 can also be on payroll costs, but it can also be used for other qualified expenses like rent, utilities. But you have to spend at least 75% on payroll costs for you to meet the forgivable threshold.
And then how do we count payroll costs? Is that basically what we've processed through our payroll service or payroll report in that 8-week period? Is that correct?
Yeah, so to spend the expenses, once the loan is essentially funded to you, once the distribution has occurred, you have what they call the covered period, which is 8 weeks from that date to spend it on covered costs. So as soon as you get the money, you have 8 weeks to use it on payroll during that period. That said, there's a little bit of gray area that people still need clarification on about whether it's costs that are incurred during the 8-week period or physically paid. That part we still don't know. So if you incur, a cost for payroll towards the end of the 8 weeks, do you have to pay it out before the 8-week period ends, or is it okay to just have it incurred? That part we don't know. But I mean, you could be on the safe side, and I would pay it out.
So you say cash. Could you run an extra payroll during that period? So you traditionally would run 4 payrolls in that period. Could you run a 5th payroll to make sure it goes to those payroll distributions, let's say like a half a payroll or something like that at the very end?
Yeah. As it's currently drafted, I don't see any requirements or restrictions on how many payrolls you run or how you pay your payroll. So yeah, you can certainly do that.
So then let's talk about again, like how to count payroll. The next big question we often get is the people in payroll. Do they have to be the same people we had when we applied for the loan, the same people we had a year ago? And some of these answers are pretty obvious. Or is it just a total dollar amount as we count that?
Yep. So that kind of goes into the next two of the kind of the 4 steps that I think are most important. The first is spending on qualified expenses. The second is you have to restore your overall headcount. And the third is you have to restore wages. So restoring your full-time employees, you don't have to have the same employees, but you have to have the same average number of employees during the covered period as you had during 2 testing periods earlier in the year. There's one testing period that's during 2019 and one that's in the first part of 2020. So you want to look at those and see, when your layoffs happened, if there were any, or if you hired any people, which one of those windows is going to be the most beneficial to you.
So yeah, it should be clear, and I think this is an important part to make. There are 2 testing windows. The first one is the first 6 months of 2019. So that you can use that as your average number of employees, or you can use the first 2 months of 2020 and use that. And everyone works in your favor, you're going to choose that one, and that's going to be your standard from this point forward in order to do that. And total headcount, just to reiterate, does not mean it's the same actual people, but it's the same number of people. So this is a time that you could bring somebody else on payroll. For example, a freelancer that you're using, you can bring them on payroll for that short amount of time and pay them through payroll instead of their 1099. And long-term question here, Louis, that does not disqualify you from later removing them from payroll and getting them back to a 1099 employee, correct?
Correct, yeah. So a lot of the planning considerations we've seen is people considering moving people who are previously independent contractors onto payroll, to try and shore up their overall headcount number.
And then using the dollar amounts, that's number of people, dollar amount. I can give people more money during this payroll period as well, right? I'm trying to get my 75% or whatever safety number I'm looking for. I've been telling people 80%, but 75% of total dollar payroll put out there, you could during this payroll period, including yourself, give yourself more money as long as it's not over $100,000 a year, and make sure you get that forgivable amount out the door.
Yep. Yeah. So there's no restriction on increasing people's pay. The third kind of bullet point that I mentioned was cutting people's pay. You can't cut anyone's pay more than 25%, but there is no restriction to increase them. The caution I would add with that, and that you kind of mentioned, is not paying anyone more than 100 grand. So they say you can't pay anyone during the covered period for an annualized amount over 100 grand. So that means, if you take whatever you pay them over 8 weeks and annualize that, it can't exceed 100 grand. This equals about 15 grand over the 8 weeks. So you can increase someone's pay, but you don't want to be paying them more than 15K over the 8 weeks. Otherwise, that amount will be a non-qualifying expense.
What was that $3,000 number you threw out there for me yesterday? 3,400 something per 2 week payroll or something.
Yeah. So if you take 100 grand and divide it by 52 weeks, you get about $1,900. And if you times that by 2, you get $3,846 every 2 weeks. So if you run payroll every 2 weeks, that's the number you want to hit to be paying the most per person.
And then I'll get really gritty and then we'll go big picture again. That number, it includes the state tax, but not the federal tax. Is that correct?
Correct. Yeah. That $3 grand is the gross, kind of the gross wage number, but yeah, you're right.
Yeah. And let me jump in with one little particular here, Tim, is I think something that's very common is a lot of owners here probably underpay themselves on payroll because it saves on some taxes, and then they take rather large distributions. So Louis, there's this practical question of, well, now if I have to pay myself through payroll in order for it to be a qualifying expense, can I give myself a raise, even though my compensation isn't necessarily going up, but I'm now paying myself more than I used to pay myself through payroll?
Right. Yeah. So you can, well, I would say it depends.
Okay. Classic accountant.
Typical accountant answer. Yeah. How can I cover my own ass? It depends on your entity's, how you run your business. If you are an S corp or a partnership, there's no reason in the PPP program that you can't give yourself a raise. The sole proprietorship is totally different because you're not paying yourself a wage. You're essentially just taking the net profit is your take-home cash, since you are the business.
Right. So
in that sense, I mean, we can go into that, but it's a whole nother calculation.
Well, just say it real quick. I think it's distributions, right? You're basically, and this is where I think a practice of keeping a separate account might be very clear, that you just take regular distributions or full distribution out.
Yeah. So your distributions, whether you're an S corp or partnership, those are not like a qualified payroll cost. It has to be run through wages, or if you're a partnership, they're called guaranteed payments.
So what would be do you have maybe a quick description of how are things different for those people that are being run as a sole proprietorship?
Yep. So sole proprietorships was one of the other kind of big late changes. We had a lot of sole proprietors who applied for their loan, and then the SBA came out with new guidance saying that, you could also, in addition to wages, include up to 100K of your net income. So some people missed that, which was unfortunate, but that's the hard thing with them, kind of just pushing out late guidance. But for sole proprietors, if you have wages that you pay to other people, that functions the same as if you're an S corp or a different entity type. They also say that you can use the loan for owner compensation replacement. That they've yet to really define that term, but it's essentially just what you take home from the net income. So big picture, they say that you can use the loan for owner compensation replacement equal to 8 weeks of your 2019 net income. So what that means is that, let's say in 2019, you made 50 grand. If you divide that by 52 weeks and times by 8, you can use the loan to pay yourself $7,700.
And you can take that out from the PPP money right away. Take that $7,700 to put into your personal account. Your payment's covered. Yeah.
Yep.
I want to go back to a quick item because someone is saying interesting, like they have a spouse or someone attached to their payroll, they can give that person a raise. We know the answer to that is yes. If someone's on payroll, you can give them more money. Specifically speaking, you actually could bring your spouse on payroll as well. So if you had let go of an assistant previous to this point and you don't need that assistant, you could actually, but your wife is helping you with the business or husband is helping you with the business, you can ask that person, hey, come on board, I'll pay you payroll during this 8-week period for the service they're providing. And the business gets back to usual and that person's replaced with a more full-time person. You can do that. So just so you know, a payroll is payroll relationships, husband, wife are not gonna have a bearing on that for you. It's not household, it's person by person. Social security number to be specific.
Yep.
This is really great. Joel, I see some of these questions being popped up here. I'm not really following many of them. Are there any ones that we want to ask as we before we move on?
Yeah, they're kind of coming fast and furious. I'll be honest. What I'll do my best to pick out the 2 or 3 and see if there's a few here that are following a pattern. But I will say this last one, I think Jared just asked is a good one. He was saying, I think you answered this question, Louis, but if the owner of an S Corp is on payroll making over 100,000, are they not to include their payroll with the PPP total in order to meet that 75%? I think the answer is no, you include up to 100. Is that correct?
Yep, agreed, exactly.
Okay. Okay, I'm going to scan the other questions and pick a few here. But do you have something else you want to jump into?
Yeah, let me just ask some practical questions because I heard some people talk about this in practice. I think it's really smart, but then let's talk about if it's actually necessary or important to do. I heard some people are basically taking the funds, putting it or keeping it in the account it's been the money has been deposited into. And therefore, it allows them to track the finances more easily of what the PPP money was being used on. From my point of view, if you're a small business or a sole proprietor, that's a great practice, especially if the bank opened an account for you in order to put that PPP money into it. Might as well just keep it and draw those funds as necessary. But big question is, it's not absolutely necessary, right? When this is all done, I'm going to be filing a payroll report, maybe some QuickBooks reports, some paycheck stubs or some check stubs, things like that to verify my spending.
Yeah. So, I mean, documentation, I think, is going to be really important. The bank account point, at this point, there's no requirement to have a separate bank account. It's probably good practice. Yeah, it'll keep things clean. You can see exactly what transactions are occurring from that account and what was intended to be used on qualified expenses. If you're already with the bank and it's easy to open an account, then sure, you could do that. The kind of the practical issue with that is a lot of payroll is already set up to come from one account. So switching that to, whether using QuickBooks or Gusto or something might be mechanically kind of hard and probably not worth it and might create more issues. But to your point, documentation is going to be very important. So whether you're using the funds on payroll or rent, you want to have copies of all those pay stubs, copies of every check. You want to have a copy of your lease agreement. I would recommend everyone have a spreadsheet that they're tracking all their expenses that they intend to be, from PPP funds, because it's at this point believe that you're gonna have to provide all of that at the end to request forgiveness.
All right. So
and then 1 second, Joel. I just have a quick follow-up. For that spreadsheet, we're actually putting one. You and I are kind of combining and putting some effort into building one for everyone. And give me a day. I'll kind of wrap my head around it, and we'll post it for you. Make sure that's available for everybody. So that's a cool point. And before we move on, Joel, I just want to kind of verify people. If for any chance someone made a mistake and they actually don't use the full 75% on that payroll, big question again, does that mean none of it's forgiven or a portion of it's forgiven, or how does that work if you actually don't hit that mark?
Yeah, I think that's also a great point at this spot. I've heard different things from different people from different firms. I think the intent is if you don't hit 75%, then that remaining amount is not forgiven. Some people think that is 100% at that point. You have to pay back. I think the intent is just the unpaid amount, under 75%. But at this point, I don't think it's clear.
Yeah, we don't have it clear. Okay, cool. That's important to know. So right now we want to play it safe and hit that 75% point as all as possible. Again, like I'll tell everyone, I know that you'll feel a lot of regret and a lot of frustration and anger if it's not forgiven, because if it's forgiven, obviously it's free money. But in the case it's not forgiven, it is a 1% interest loan. So the interest on the loan is not a burden. And I believe it's also federally backed, right? So it's a non-recourse loan, which means if for some reason your business doesn't continue and the loan is outstanding, it will be forgiven at that point. So those are big picture, long term. Hopefully nobody has to worry about those ideas, but we want to make sure we say that. Go ahead, Joel. Sorry to cut you off.
No, cool. I'm glad you brought that up, because that is big. Thank you for keeping an eye on the big picture. A cool question here from Andre. I love this one. What's up, Andre? Not sure if this was brought up, but if you cut your team's salaries and you get a PPP loan, can you keep paying employees at that reduced rate, or should you bring them back up to when you use the loan?
Yeah, so that goes back to restoring wages. Again, you have to look at what you were paying people both in 2019 and the first quarter of 2020. I'm just kind of keeping a high level because the calculation is more complicated than that. But essentially, you can't have cut anyone's pay more than 25%. So if you did do that, you need to restore them. That said, there's a safe harbor date of June 30th. As long as you restore people's wages by June 30th, they'll essentially treat it as if they were never reduced in the first place.
All right.
And again, that's a testing period of the first 6 weeks of last year or the first 2 months of this year. That's the testing period you're going to compare that 75% amounts to.
So there's a question here. There's a really basic one, but I love. What documentation is needed to show the bank to demonstrate that your business was, quote, hurt by the crisis? Any thoughts on that, Louis?
That is actually a very good question and a good point. The other thing that you've kind of seen in the news, like I mentioned, is all these really big companies who are returning the funds. So with kind of the late push of the applications, and even in this one, they now have a more strict and more obvious good faith statement that you have to approve, saying that all the information in the application is one, true, and that you have been hurt by COVID-19. So if you are a public company and you have access to funds in the stock market or can raise capital, then you are hurt, you've definitely been impacted, but your necessity for the funds isn't as high. So to answer the question, from what I've seen at this point, I haven't seen any banks ask for specific backing to prove that you've been hurt. They haven't asked for P&Ls or show a reduction in your gross receipts or anything like that. But you have to make a good faith statement that I'm pretty sure if you lie, it's under penalties of perjury. So it's really on you and what statement you're making on the application.
And from my understanding, injury could be, you could look at total picture injury to make a claim for it. You could also make an injury case on a case-by-case basis. There are projects that you have that were absolutely for surely canceled, and you can show documentations, like an email, a client saying, we're putting this project on hold, or we're canceling this project due to COVID. That's an injury and hurt of revenue you would have won or would have had in-house at that time. Those are the kind of injury we want to be able to show and prove.
Yeah,
we have a lot of questions. We might be going for 45 minutes on this one.
Yeah, we might go a bit more. I think I know the answer to this one, Louis, but tell us, Ian, how you doing, Mr. Bubbas? I have an S Corp. In this setup of half distribution and half W-2, I guess is how he compensates himself. I applied for a PPP just at my W-2 level. Should I have applied for the full amount? I'm guessing he should have applied for 100K, assuming his total comp is over 100.
Correct. Yeah. So he should have just applied based on his wages, and assuming he pays himself over 100 grand, he would have just applied for
even if
amount based on 100K.
So, and by wages, you mean distributions and W-2?
Just W-2.
Oh, just W-2. So what if he has a really tiny W-2 but really big distributions? Is he out of luck?
Yeah, he's out of luck. And yeah, I won't go into it, but there's other issues with the IRS that they don't necessarily love that ratio.
No, of course. I mean, that's sort of a common pickle that some owners get into when they set their salaries too low. And this is maybe one of those instances where it might come back to bite some people.
Yeah.
that have done that.
Louis, it does seem like a few questions that I'm reading. People are trying to figure out how they could cram all they need to in that 75%. So to reiterate what you said before, 75% has to go through a payroll process. You're going to pay yourself payroll. You would pay the tax distributions from that. You're going to get a W-2 from that at the end of the year. If somebody at the end of that it didn't actually get the 75%, couldn't they also pay back some of that loan? Because there's no recourse for prepayment, right? So if I actually had a $100,000 loan and I only used 50,000 of it on payroll, couldn't I then give $40,000 of that loan back and say, hey, I didn't need this portion of it, and then I hit my 75% ratio? Hope that made sense. Okay.
Yeah, I mean, yeah, it's the same effect if you get to the end of it, and in this case, if you essentially didn't use the funds, you owe it back anyway. So yeah, you could just pay it back.
Pay it back, but then that 75% ratio is there, and therefore, yeah, great.
Louis, are you seeing this question that Mark posted? It's a little bit technical. I think if I read it, people are their heads might spin a little bit. But he's basically asking this question, hey, as a sole proprietor, if I make over 100K, that's really only going to end up being about a $15,000 PPP loan. Are there any additional draws available? Because he's saying I requested extra money, meaning retirement contributions, utilities, et cetera, which was what he saw on the SBA site. Yeah,
so he's going to be limited to the 15K, which is the same as they gave us earlier. So the amount, I'm just reading the question again. So they'll calculate based on your 2019 net income, like we talked about briefly earlier. So it's divide your 2019 net income, by 52 and times it by 8, and that's what you can pay yourself up to 100 grand. But if he got more and extra of that, I would assume then he must have other payroll, because I don't know how he would have gotten more money.
Yeah, I mean that's
but Mark's case
that I'm hearing.
And in Mark's case, this might be a situation where he could begin a payroll with somebody else. So somebody he collaborates with on a project, he can put that person on payroll. Or again, this is an opportunity where a spouse who usually helps you with business might do your bookkeeping or whatever, and you don't pay them. This is an opportunity to put that spouse on payroll as well and get that total payroll number up to where it needs to be.
So this might be an interesting question for us to ask. Let's say an owner submitted an application and maybe did the math wrong, and they end up receiving more money than perhaps they were legally entitled to. If that person goes out and hires someone and reaches that threshold, are they going to be okay? Does that make sense?
Yeah, I can't say at this point that they'll be okay. I don't know for sure. I don't know if they have covered that in the kind of frequently asked questions the Treasury has published, but I mean, a lot of people were being aggressive with their loan amounts because everybody needs the funds.
Yeah.
So I would.
Yeah, you get my point, because I know some people have gone through and done the calculation here, and they said, oh, I'm going to get $15,000. They did another one and it said 25,000. They did another one and it said 35,000.
Yeah.
And so they think, well, I guess I'll just apply for the biggest one, but maybe there's an error in that calculation.
And that's what I was asking earlier, Joel. Some of that money can be given back now. There's no prepayment penalty. So you can say, hey, I actually calculated it wrong. This $10,000 was incorrect. Take it back now. So now everything's just based on the 25,000 instead of the 35,000. But I also believe it is a stimulus plan. So the idea of restoring payroll, bringing people back on payroll, or increasing payroll are all good reasons why this money is at play. So that's an opportunity to create the stimulus. That's what this is about. So keep in mind what the intention is, and always work towards that intention.
Yeah, spirit of the law, not just the letter of the law. And hopefully that won't come back to bite us, right?
Right.
I think I'm looking over these questions, and I think we've nailed most of them. I would say from all these questions we have, some of them get very specific about a person and their company, which I know you can't necessarily give them that advice without being their CPA. So let's just encourage people to reach out to their own accountant and their own CPA and create that engagement and start asking those questions. There are some resources online to check and do this math, check it again. And again, Louis and I are collaborating on a spreadsheet that we can publish for you later today or tomorrow. We'll put that in the 7 ingredients finance channel, and I'll just share it with all, so that you can all get a chance to see it and download it and use it for yourself. It also feels like a lot of these questions are kind of specific or a kind of nuance about the creative business and bringing people on. Again, just big picture thinking. We want people to understand this as a stimulus package. We do want you to bring on and restore those employees. That's what the intention is. I know many of you had to go through the hardship process of letting people go, and that method of bringing someone on just for 8 weeks to take them back off again. If you're dealing with those specific issues, I'd say reach out to Joel and me, or reach out to your CPA and Louis if you're willing to take on people. I know you have minimum requirements, but take on certain people, answer those questions. We would love to be available to help you process some of those other details, because there are some nuances here that we understand are kind of part of the calculation. We just want people to get a good sense of what's happening. Joel, I see this last one from Brent. That's a good question. Why don't we throw that one out there before we?
Yeah, I was gonna bring that one up as well. Thanks for that question, Brent. He's asking for the EIDL monies, which is $1,000 per employee. We have heard conflicting reports that it will be forgiven or that it won't. Do you have any insights on that, Louis?
My understanding at this point is that EIDL money specifically will be forgiven, but it does reduce the forgivable amount of the PPP. So if you got, let's say you got $3,000 from the EIDL and you got a PPP loan of 50, you have to cut the forgivable amount down to 47.
Okay. Well, that's so they kind of work together in tandem. The EIDL, in a sense, reduces that forgivable amount on a PPP.
Yeah, which makes sense. I think originally the PPP was supposed to incorporate the EIDL if it's awarded to you. If you don't get a PPP money, the EIDL does stand alone as a forgivable amount of $1,000 per employee. And I believe there's no reporting on that from this point forward. I haven't heard any news that you're going to report anything beyond that forgivable amount. There's probably be something. There's going to be additional tax forms, aren't there?
Always.
Wait till April 2021, and we're going to be finding out all the nitty-gritty details of what this is.
Well, Tim, maybe what we should do is, it seems like questions have more or less been answered, kind of coming down to just a few stragglers here. Maybe we should just see, Louis, if you're willing to maybe come back next week. We're going to try and continue doing our daily briefing for a little while longer. But before we wind things down, it would be great to have you come back and see, hopefully people are now in the stage of, I got the money, I've spent the money, and now what?
Yep. Yeah, for sure. I'd be happy to help. I think it'll be similar to last time, where last time we had this conversation, and then pretty much by the time the conversation was over, most of what I said was outdated. I'm sure half of what I say now, the same thing will happen now that people are getting their money. So I would be happy to come back and kind of advise on what to do now and whatever I said before that was wrong.
Well, we might bring you back on Friday for the Ask Me Anything Friday also, depending on kind of what people will watch the video or whatever. So if you're available, we'll drag you back in and make sure we publicize it so everyone knows that you're joining us.
Well, everyone here, please do me a favor and send Louis a heartfelt thank you. He's just doing this out of the kind of his heart. And also big shout out to Tim, who stopped in the middle of his road trip to find that beautiful setting with the open sign and the Corona beer. I mean, come on. And also doing this out of the kindness of his heart. So give both of them a big hearty thank you.
Yeah, it's so good to be with you guys today. Thank you again for being part of the daily briefings. And Louis, I can't thank you enough. It's always good for you to be available. When I have a personal phone call to ask you, you're available, and to jump on these calls. You're a great collaborator on many things.
Thanks, I appreciate it, and thanks for having me. It's fun.
All right, thanks everyone for being here. We'll see you in the 7 Ingredients Slack channel, where we will tackle more questions, and Tim and Louis will get you that spreadsheet that they're working on. Until then, we'll see you back tomorrow for another episode of the Daily Briefing.
Thank you.